Hello and welcome to your daily dose of Satoshi's news. Today's date is Friday, the 12th of January 2024, the year of 1 million transactions per second and more. BuyBSV.live was the best place to buy Bitcoin SV online, the original protocol and genuine Bitcoin. Here we go, so let's start off with a little bit of Bitcoin history. I love these things. Honestly, I find this fascinating the more we get into it because I'm actually finding out things that I'd only heard were rumours. So here we go. Let's start off with yesterday because I didn't do a show yesterday. So on the 11th of January 2009, Hal Finney actually wrote in an email to Satoshi Nakamoto, "Imagine that Bitcoin is successful and becomes the dominant payment system in use throughout the world. Then the total value of the currency should be equal to the total value of all the wealth in the world. Current estimates of total worldwide household wealth that I've found range from $100 trillion to $300 trillion. With 20 million coins, that gives each coin a value of about $10 million. So I'd heard many people quote this before, but I hadn't found it literally until I looked for it like this. So here it is. So this was from Hal Finney replying to Craig, who wrote this email out on the 8th of January 2009, explaining there would be 21 million coins and that the Coinbase couldn't be spent until a further 120 blocks had been created. And then Hal had written here, with regard in reply to that, this is what he'd said. In total, it's interesting that the system can be configured to only allow a certain maximum number of coins ever to be generated. I guess the idea is that the amount of work needed to generate a new coin will become more difficult as time goes on. One immediate problem with any new currency is how to value it. Well, it's not actually a currency. So again, Hal didn't realize what this was. It's money. So he said, even ignoring the practical problems that virtually no one will accept it at first, there is still a difficulty in coming up with a reasonable argument in favour of a particular non-zero value for coins. As an amusing thought experiment, I imagine that Bitcoin is successful and becomes the dominant payment system in use throughout the world. Then the total value of the currency should be equal to the total value of all the wealth in the world. I mean, that statement is true. Current estimates of total worldwide household wealth, but again, it's not just household wealth. This is corporate wealth. This is investment wealth. Everything will be backed by this, which is where his figure is exceptionally low there. So he says that I have found range from 100 trillion, again, he wasn't looking at the derivatives market, which is 800 trillion, to 300 trillion. With 20 million coins, that gives each coin a value of around $10 million. Again, undervalued there, in my opinion. So the possibility of generating coins today with a few cents of computing time may be quite a good bet, with a payoff of something like 100 million to 1. Even if the odds of Bitcoin succeeding to this degree are slim, are they really 100 million to 1 against? Something to think about. How? There we go. Awesome. Absolutely fantastic. So there we go. And I've got that in Bitcoin history there. Also, on the 11th of January 2024, this is hilarious. So we have the SEC approves the BTC ETF. And this article was released in The Guardian literally just yesterday. This cracked me up. So I'll tell you why this is funny. Because BTC does nothing. It has no utility value whatsoever. So what is it that's driving the price? Well, what drives the price is them pumping copious amounts of tether that they've made from nothing to drive the price to try and fulfill their prophecy, their narrative of it being a store of value in digital gold. It does nothing. If something is useful, it's valuable. If something is useless, it's worthless. It's that simple. Now, the issue with an ETF is that the ETF is literally in itself its own independent fund dependent on the performance of Bitcoin. So what they're going to do is effectively buy a share in the fund then buys BTC with it, but the value of the share price of the fund is dependent on supply and demand, and you cannot create tether to pump the price of the ETF share price. So we are really going to see how stupid these BTCers are if they actually want to buy a share in a fund that is representative of the performance of BTC when BTC is purely pumped by Tether. There's no performance there whatsoever, and they can't pump the price of the ETF with Tether. So now you've actually got people like trying to put their funds in fiat currency, which is fraud anyway, into something which is entirely dependent on a fiat currency like Tether pumping the price. This is absolutely hilarious. I mean, literally, like if this thing takes off, and the price of the BTC ETF shares goes up, I mean, like, not even BlackRock is going to buy it. This is why I think they're relying on unsuspecting retail customers. But, are they that deluded that they think that BTC actually is driven by market forces of supply and demand and not by Tether? All you've got to do is look at the amount of Tether that's been printed to make you realise that the price of BTC is absolutely fraud. It's complete manipulation. This is absolutely hilarious. So it'll be interesting to watch and learn, but let's have a read through this article anyway. So it says, the SEC has approved Bitcoin ETFs. What are they and what does it mean for investors? The SEC has given the green light to 11 exchange trade funds for BTC, opening the door to cryptocurrencies for many new investors. Well, you're not even actually buying Bitcoin with it. You're not using it. You're buying a share in a fund that buys it on your behalf. But the value of Bitcoin is dependent on its utility. So if you've got a fund that's buying it, you're actually not allowing the utility to spread. You're restricting the supply on the market of people to using it because this fund is holding it all. But what they're basically doing is they're making Bitcoin even more scarce. So it's going to be even more valuable in the market, but BTC is not valuable because nobody's using it. If no one's using it, it's got no value whatsoever. So that's hilarious. But again, we all know that BlackRock has said, well, we might change our mind, which might disappoint investors. So chances are they might be buying BSV with it. But can you imagine? They're actually buying BSV and there's only $5 million worth of available liquidity in the market? Absolutely hilarious. So let's see what it says here. Continuing, the US securities regulator has approved the first US-listed exchange-traded fund to track BTC in a watershed moment for the world's largest cryptocurrency and the broader crypto industry. The announcement came at the end of a tumultuous 24 hours of the popular cryptocurrency, which saw a tweet sent from the account of the Securities and Exchange Commission (SEC) announcing the approval of the long-awaited ETFs on Tuesday, leading the price of Bitcoin to spike by more than $1,000. Soon after, the SEC said its account had been compromised and that the tweet was unauthorized. By Wednesday, however, the SEC had approved the ETFs, this time for real, adding that it remains skeptical about cryptocurrencies. As it should do, it's failed to protect consumers. It's a massive fail here. What has been approved, the SEC has given the green light to 11 ETFs for BTC in the US, opening the door to cryptocurrencies to many new investors who don't want to take the extra steps involved in buying actual Bitcoin. Oh, right, but they're going to take the steps to actually purchase a share in a fund. What a joke. An ETF is an easy way to invest in assets or a group of assets without having to directly buy the asset itself. Yeah, so you don't know, we'll buy a share of gold. It's like buying a timeshare of gold. Ridiculous. For example, and also when you're buying a share in a fund, you probably have to pay a percentage. You have to pay the fund manager a management fee for owning a share in the fund. It's absolutely ridiculous. So, for example, the SPDR Gold Shares ETF allows anyone to invest in gold without having to find a place to store a bar or protect it. Well, what do you need that with Bitcoin? All you need is a phone. ETFs can also be easily traded on stock exchanges. Since BTC's inception, anyone wanting to own one would either have to adopt a digital wallet or open an account at a crypto trading platform like Coinbase or Binance. Can't believe they're mentioning those two scam exchanges. That's outrageous. Cryptocurrency advocates say the development will thrust the once niche and nerdy corner of the internet even further into the financial mainstream. Well, we'll see about that. See how stupid people are. The decision to approve the ETFs is a major win for huge fund managers like BlackRock, Fidelity Investments and Invesco, who will manage the funds. There we go. They'll manage the funds for a fee. And have pushed hard to get the SEC to approve them. So now you're going to have to pay for the privilege of having a fund managing your Bitcoin, which is just holding them in a wallet. It's so ridiculous. I'll do that for you if you want, for a fee. Some products are expected to begin trading as early as Thursday, kicking off a fierce competition for market share. What has the SEC said? Despite approving the new ETFs, the SEC said it was still deeply skeptical about cryptocurrencies, as it should be because they're fraud and they're absolutely incompetent. and that its decision did not mean it approved or endorsed Bitcoin, BTC. Investors should remain cautious about the myriad risks involved with Bitcoin and products whose value is tied to crypto, says Gary Gensler, the agency's chairman. Other commissioners expressed alarm that the SEC agreed to approve the funds. Quote here, "I'm concerned that these products will flood the market and land squarely in the retirement accounts of US householders who can least afford to lose their savings to the fraud and manipulation that appears prevalent in the spot Bitcoin markets." And that was a quote from Commissioner Caroline Crenshaw, said in her dissent. So what does this mean for the price of Bitcoin? This will be interesting. Oh my God. After nearly 2 years of turmoil that has seen the price of BTC plummet and the failure of several crypto firms, Wednesday's announcement will come as good news to many investors in the crypto market. The green light from regulators has been anticipated for several months, and the price of Bitcoin has jumped about 70% since October as crypto investors speculated the broad use of Bitcoin ETFs would drive up demand for the cryptocurrency. The price has sunk as low as $16,000 in November 2022 after the bankruptcy of crypto exchange FTX. It was traded at $46,500 in the hours after the SEC announcement. Standard Charter Analysis this week said the ETFs could draw $50 billion to $100 billion this year alone. That's outrageous. That is, I would say that's promoting. I'd say that's maybe like promoting financial products and advice. Speculation. Potentially driving the price of Bitcoin as high as $100,000. Others have said inflows will be closer to $55 billion over 5 years. Other analysts have been more cautious in their predictions, saying that ETFs may actually help stabilize crypto prices by broadening their use and potential audience. Bollocks is what I say to that one. Most, however, remain concerned that the broad use of crypto ETFs could put too much risk and volatility into Americans' retirement accounts. The price of Bitcoin is known to fluctuate wildly, often without warning or explanation. The notorious price volatility of a BTC could expose mainstream investors to a less familiar spectrum of investment risks, said Yanis Ikoas, Senior Director of Moody's Analytics. The price of Ethereum, and the second most popular cryptocurrency, has also risen on speculation that fund managers will create ETFs around it. Absolutely outrageous. What's this? Well, 2023 didn't exactly go to plan, did it? Here in the UK, the Prime Minister, Rishi Sunak, has promised us a government of sustainability and competence, not forgetting professionalism, integrity and accountability. After the rollercoaster ride of Boris Johnson and Liz Truss, remember Liz? These days, she seems like a long-forgotten comedy act. Instead, Sunak took us even further through the looking glass into the conservative psychodrama. What's all this about? Right. Irrelevant. Anyway, so as it is the 12th of January today, check this out. So on the 12th of January 2009, how Finney receives the first ever Bitcoin transaction of 10 Bitcoins from Dr. Craig Wright at block height 181. For the purpose of the ledger, 40 Bitcoins were sent, 10 Bitcoins were kept, and 30 Bitcoins returned, showing a balance of 10 Bitcoins received by Hal. And we actually have the transaction here. There we go. Check it out. 12th of January 2009 at 2 minutes past 6. 40 Bitcoins were sent, 10 Bitcoins were kept, and 30 Bitcoins returned. Amazing. Blows my mind every time. And also on this day, so on the 12th of January 2021, was this article in the Guardian saying programmer has 2 guesses left to access £175 million Bitcoin wallet. Whoa! Let's have a quick look at this then. Hold on. So it says Stephen Thomas is not the first person to forget a password, but memory lapses are rarely so potentially costly. Oof. Stephen Thomas has just 2 chances left to get his hands on his $240 million fortune. Thomas is a San Francisco-based computer programmer, and a decade ago he was given 7,002 Bitcoins as a reward for making a video explaining how the cryptocurrency works. At the time he was paid, they were worth $2 to $6 each. He stashed them away in his digital wallet and forgot about them. Now each BTC, or in fact they'll be unsplit Bitcoins, is worth $34,000. Again, this was written back in 2021, so it's now $46,000. And the content of his wallet are valued at $240 million. But Thomas had forgotten the password that will unlock his fortune. German-born Thomas has already entered the wrong password 8 times, and if he guesses wrong 2 more times, his hard drive, which contains his private keys to the Bitcoin, will be encrypted, and he'll never see the money. Oh my goodness me! What is the point in having him in a wallet like that actually locks you out of it? The price of BTC hit more than $40,000 last week. So again, remember this was written in 2001, having doubled in less than a month. It has since fallen back, but it is still up by more than 700% since the pandemic was first declared in March last year, rising from around $5,000. Thomas said he has tried 8 most frequently used passwords to access his IronKey hard drive, but all turned out to be wrong. I mean, you may as well just give them away rather than just lose them yourself. The device auto encrypts all contents after the 10th inaccurate guess. But why? When it auto encrypts, it means they're accessible to no one. Lost forever. So he said, I would just lay in bed and think about it. Thomas told the New York Times, when I would go to the computer, some new strategy and it wouldn't work, and I would be desperate again. Thomas said the experience has understandably put him off cryptocurrencies. This whole idea of being your own bank, so they're using this to push the narrative. Let me put it this way, do you make your own shoes? He said. That's completely irrelevant. The reason we have banks is that we don't want to deal with all those things that banks do. You've got to take responsibility for yourself, I'm afraid, or you're going to have to or you'll face dire consequences. Following the publicity of Thomas's plight, Alex Stamos, an internet security expert at Stanford Internet Observatory, said he could crack the password within 6 months if Thomas gave him a 10% cut of the digital fortune. For the 220 million in locked up BTC, you don't make 10 password guesses, but take it to a professional to buy 20 iron keys and spend 6 months finding a sidechain or uncapping. He said on Twitter, I'll make it happen for 10%. Call me. Cryptocurrency data firm Chain Analysis said it's estimated that around 20% of the existing 18.5 million bitcoins appear to be lost or stranded in inaccessible wallets. In 2013, Welsh IT worker James Howells accidentally threw out a hard drive containing the keys to 7,500 bitcoin at the time. The lost bitcoins were worth around 4 million. Now they could be worth more than 250 million. Oof, my goodness me. Look after your bitcoins is all we can say to that one. So let's see what's going on. Oh, look at that. So Bitcoin up to $94. Transactions absolutely smashing it. 95.3% and 98.65% of the block size. No gigabyte blocks, but still 334, 121, 176 massive blocks. 239, 309, 170. These are megabytes, remember, in comparison to Coolcoin BTC that has only got 1 megabyte block size. Crazy. Look at this. It's currently 4.3% more profitable to mine on SV. So that's 3.4% comparative profit in comparison to BTC. And yet these shitcoins here, Bcrash and Fisher Cash, you're mining at a comparative loss. So what you do is you add the comparative loss to the comparative profit, and then you get the difference in mining these. Like, absolutely amazing. Look at that. So Bcrash is now 3.1% more profitable to mine BTC. So we'll add that to 4. You got 7.2. You're actually mining Bcrash gives you a 7.2% comparative loss to BSV. But it just goes to show you these miners have got all the gear and no idea. It's hilarious. If you really want to know what's going to happen in the market, again, all you've got to do is really look at the daily accumulated Bitcoin blockchain growth by network. It tells you all you need to know. Let's see what's going on here. Yeah, so BSV looking very healthy there and encouraging other miners onto the network. Bcrash currently got 72% of the block reward being won by other miners, and Fisher Cash 67%. What a joke. What a joke. When will they realise? Probably when it's too late and the rest of the market wakes up. Oh my goodness me. And let's have a look at Livecoin Watch. We've got a price here, 93.58. Looking really strong though, maintaining its price there. Let's have a look at this. Oh my god, We've got a crypto market capitalization here of 1.78 trillion dollars. Oh my god. That's going up and up and up. Literally the largest financial bubble in history. 1.78 trillion dollars worth of absolute garbage. Oh my goodness me. But where's the genuine Bitcoin creeping slowly up the charts? Look at that. And just to show you what I mean, we will have a look at BitInfo charts. Look at that. Look at that. The genuine Bitcoin with 75.8% of the entire market's transaction volume on its network. Smashing Ethereum, smashing XRP, smashing BTC, smashing Litecoin, smashing Dogecoin. Look at that. Beautiful. That's what we're talking about. Right, there we go. That is a 20-minute show. Hope you enjoyed it. And remember, largest court case in financial history coming up on the 5th of January 2024. Stay tuned. We'll bring you more. And until then, be aware, take care, stay safe out there, and we'll see you in the next one.